All right, guys. Good morning. Good morning. Hope you guys are good today. It is non-farm payroll unemployment day. We got that data dropping live 8:30 Eastern. All right, guys. Good morning. Good morning. What's up, Trey, Ryan, Pawn, Wolf? Good news. Video, K, Egan, Q. What's up, chat? We're here. Yeah. So first things first. I mean, you can see Tesla down all the way to 300s here. We can take a look at the SPY. Today, SPY is red. Take a look at Nvidia. Nvidia is red. Everything's essentially red this morning. We had Apple and Amazon earnings yesterday, in which the market did negatively react to them to a certain extent. Here's Apple. It's slightly green still from its earnings report. You know, it's kind of interesting. Like we had this X.com post, and everybody started talking about how Apple was down big and all this stuff, but Apple's actually slightly green from its earnings report. Bitcoin all the way down at 115s today. If we take a look at Amazon definitely negatively reacted. It's down to 216. And I remember I was like, hey, I'm bullish on Amazon, bearish on Apple, but I think I got it backwards. Apple went up, Amazon went down. So all right, so all right, today we have non-farm payrolls and unemployment. We're going to put that data up on screen to let you kind of catch back on this. Figma, where's Figma at? What did Figma end up doing? There's Fig at 140s. Fig very successful, went up to 150s yesterday after the closing bell. So look at Fig at the bottom chart. What a move, man. What's up, QB, Dragos, Bog? Yeah, so just to talk about markets here. So Meta, Microsoft lifted US futures, NASDAQ. See. August 1st, tariff deadline as well. So this is the tariff deadline as well. So we should have some interesting news. Yeah, so Meta, Microsoft, Wednesday posted Q2 earnings. Meta jumped 11%. Microsoft jumped 6 to 9%. Yeah, I'm trying to look at the NASDAQ here. NASDAQ. NASDAQ's very, very red if we take a look at it. Here's the SPY. The SPY is very red as well. So the president unveiled a sweeping tariff executive order on 68 countries, including Canada, India, Taiwan, South Korea, European Union, raising duties up to 41% on some of these goods. The new measures are set to take effect August 7th, triggering a surge in market volatility. Again, Amazon missed its guidance despite Q2 earnings. Its stock slid about 7.5% in pre-market and dragged broader sentiment down. Markets are gearing towards today's July jobs report. It could heavily influence expectations for a future rate cut. We have a lower probability now of a rate cut in September. We're now at under 40%. If we take a look at bond yields today, here is the 10-year Treasury yield. It does look a little elevated versus where it was. Yeah, so the 10-year is actually up a little bit from yesterday. Here's the 10-year Treasury yield, elevated, higher interest rate sentiment. You can see the 10-year, we're currently at 4.39% for the 10. I thought Amazon beat too. Like the number I showed for Amazon yesterday was that they forward guided still disappointed. Amazon posted 167.7 billion in revenue, up 13% year over year. Earnings of 168. They fell 7% after hours. They projected third quarter operating income below the 19.5 billion analysts expected. So markets sold off on downbeat profit guidance, specifically operating income overshadowing some of the revenue expectations for them as well. Is kind of what happened. AWS grew 17 to 17.5%, which met estimates but trailed Microsoft and Google's cloud. All right, guys. And it is payroll day, man. Coinbase got wrecked. Yeah, Coinbase missed almost everything when we take a look at it. It really did. Coinbase missed basically freaking everything. Every metric Coinbase could miss, it basically missed it. So Moderna posted earnings early this morning at 7 a.m. They posted 213 versus 297. Loss per share, revenue of 142 versus 113, so better than expected. Moderna numbers. Moderna's still down though. It's down to $28.28. Okay, so Jerome Powell was mentioned again by the U.S. president this morning. The U.S. president posts Jerome Too Late Powell. And again, I'm quoting him. I'm not saying I agree with this. I'm just quoting the news here. But the U.S. president posts Jerome Too Late Powell, a stubborn moron, must substantially lower interest rates. Now, if he continues to refuse, the board should assume control and do what everyone knows has to be done. End quote. Not saying I agree with him. This is just his statement. Also, the Chinese state media People's Daily on security risks related to NVIDIA chips says foreign companies must respect Chinese laws. Only by providing convincing safety protocols can companies eliminate the worries of Chinese users. End quote. So some pessimistic things this morning, and the market's down. Chevron posted earnings. They posted 177 versus 174. But Google, Capital G, and NVIDIA are in talks to invest in Vast Data's new funding round, which could value the company at up to $30 billion, according to Reuters. Yeah, so the president pushed tariffs back 1 week. Yeah, so new import tariffs announced the U.S. administration are the biggest driver of market sentiment. It includes levies on a wide range of global trade. S&P futures are down about 1%. Global stocks are in a sell-off. The new tariffs are raising concerns about global economic growth and inflation. We did have corporate earnings. Again, Amazon is down big. 8% in pre-market right now. Apple is up about 2%. So, fastest quarterly revenue growth in over 3 years. Coinbase is down over 12%, missing revenue estimates for the second quarter and a lot of other stuff. Microsoft extended its gains, though. If we take a look at Microsoft's slightly green. Again, earlier this week, the Federal Open Market Committee paused interest rates, which, of course, made the president upset. I mean, I don't think it was the pause of interest rates that made the president upset. I think it was more so the hawkish, you know, no rate cut sentiment that put out there. You know, again, Jerome Powell and the president are like an old married couple, and you know, the Nasdaq is down all the way down to, look at this, the Nasdaq, the NQ, we're sitting at 23.1s right now on the NQ, 23.1s. So we are way down here on the Nasdaq. Let me put this up so you can see it. Way down on the NQ. You know, it's kind of a big like pullback here because we were way at 23 like 8, right? Are the all-time highs 23.8s? Yeah, 23.850 all-time high. We're now all the way down to 23.1. I'm watching 23.1 though. 23.1 might be a psychological level. We'll draw some levels coming in on our charts. But man. Yeah, I mean, I don't think Powell has any interest in continuing. Are you bullish or bearish on today's jobs report? Are you bullish or bearish on today's job report? Vote on that poll. Let me know how you feel. Need more of a healthy pullback. The Shiller PE ratio is crazy high. Yeah, I mean, that's essentially what he said. He said he's basically, everybody should be happy he doesn't raise rates, which is kind of it's a strong stance. I mean, and again, today, guys, we got a lot of stuff. We got average hourly earnings dropping at 830, non-farm payrolls, unemployment, private payrolls, U6 unemployment rate. Last time was 7.7%. We got manufacturing PMI at 945. We got construction spending at 10, ISM manufacturing PMI at 10. Michigan inflation expectations and consumer sentiment at 10. We got the Atlanta Fed now at 1 p.m. today and more. So we got a lot of stuff going on today, to be honest. Analysts are expecting a moderation in employment growth. On the bottom of the screen, all right, so we're going to give you guys some labor market expectations here. The labor report, non-farm payroll data is expected. We did have another interesting thing that came out this morning. We had European CPI show up this morning at 2%, higher than the 1.9% expected. Core CPI year-over-year did show up at 2.3% today. This is inflation data. And this is after yesterday's inflation data was slightly elevated versus expectations. Big IPO running big, man, up a huge amount. IPO'd around $25-30 a share. It's now at $140 for the FIG IPO. A lot of people made money on that. But yeah, non-farm payroll is expected at 106. Previous was 147. Unemployment expected at again, unemployment expected at 4.2%, which is a slight uptick from what it was last time. At 4.1%. Gotta fit this on screen. Let me know if you can see that well at the bottom. You should be able to see it good enough. But let me know. Everything's down. You can look at the very bottom of the screen. Everything's essentially down right now. I wasn't telling the whole truth. It's the first double dissenting. Yeah, I know. So Bowman and another dissented. First time in like 40 years. 35 years. Big spiked up in the middle of the night, as it should. I mean, Amazon's down big. Apple's slightly green, but markets are volatile. Dominion Energy just posted numbers too, but yeah, markets are volatile right now. Yeah, I'm gonna say this about AI. I use AI on a regular basis, and I think I've gotten used to using ChatGPT. Gemini is far more accurate and reliable. Gemini, and I'm not just saying that because Google. I work with Google a lot. Gemini's just better AI system. It's just genuinely a better AI system versus ChatGPT. You know. Like ChatGPT is not the most accurate one, but like I could ask Gemini to give me the big 5, you know, things to watch for today's labor report. And so what it says is number 1 is slowing job growth. The headline number for non-farm payrolls is expected to show a significant slowdown. And I already talked about this. Previously it was 147. They're expected it at 106 today. Analysts, including FactSet, predict an increase of around 115 to 117 jobs for July. I'm showing 106. Another one I'm looking at shows 100. And so I'm showing between 100 and 106. But this would be a notable decrease from 147 added in June. It would mark the smallest increase in several months. This cooling is attributed to the lingering effects of high interest rates and recent trade tariffs. Some banks like UBS are even more bearish, predicting a soggy report with a gain of only 95,000 jobs. So UBS is only predicting 95K. Let me put a timer up so we can see when this report's about to drop in about an hour. All right, there we go. There's the timer. The unemployment rate is also expected to tick up 4.2% versus 4.1% in June. This is seen as a sign of normalizing job market and key data points for the Fed. The thing to understand about this, though, is that like a big portion of this expected increase is linked to a decline in the labor force participation rate. The number of discouraged workers, people who have stopped looking for a job because they don't think any are available, is on the rise too. Private sector is where most economists are going to be focusing on. They're watching the contribution of job growth from the private sector. The overall numbers are expected to be soft. The private sector is seen as sluggish. Analysts highlighting economic sensitivity. Cyclical industries have added almost no new net jobs. Private sector weaker than expected, 74,000 in June. Today's report will be highly scrutinized for that number as well. On the labor report, crucial update on average hourly earnings. Consensus forecast suggests 0.3, a slight increase from 0.2 in June. Divide in job market health. Unemployment rate is low. Data is likely to reveal that certain groups such as college graduates are struggling. Unemployment rate for young college graduates aged 22 to 27 went up 5.8% in March, which is its highest non-pandemic level since 2012. 13 years is kind of what we're seeing now. I've used all of them. Gemini is the best. Gemini is the most reliable for querying, like as a programmer, like to query things, if you know what that means, like pulling information. Gemini is the most reliable. 100%. ChatGPT is at the bottom of that, by the way. ChatGPT might just say some random stuff that's not even true just to kind of make you happy. So ChatGPT is at the bottom. I like ChatGPT for some stuff, specifically like programming. ChatGPT is pretty solid, but ChatGPT will also just kind of tell you what you want to hear, even if it's not necessarily true. Gemini is usually much more accurate with its querying of data. The job announcement is at 8:30. It might be in the title as well as a timer on the bottom right. Yeah, well, college, you're like, listen, jobs are saturated in that regard, right? Like college graduates, like, listen, I understand. I have children. I want them to go to college. But the problem is that everybody goes to college now. And so the standard at which people are hiring is increasing. You need more and more degrees as time goes on. You know, 100 years ago, 50 years ago, everybody didn't go to college. You know, and it's still the same dynamic today, but it's much more swayed towards going to college now. But 50 years ago, everybody didn't go to college. 50 years ago, people understood that you didn't need to go to college necessarily. You could succeed in business and not go to college 50 years ago. Today you can still certainly succeed in business without going to college. Entrepreneurs have a huge advantage versus people that go to college in a lot of industries. They just get started. They get started earlier. Hell, I make more on YouTube than 95% of the people I know that graduated college, including people that got masters, which kind of shows the nature of the world right now. But especially with AI becoming more and more and more prevalent, yeah. And so if you get STEM degrees, I support that 100%. I think if you're gonna go to, this is what I teach my children. You know, you go to school, you better get a STEM degree. Don't get a business admin degree. It's not going to mean anything. You know, you better get a master's if you're going to get that. And even then, you know, if you're going to get a business degree, get something like, figure out what you want to do prior to getting that degree and then focus on that. But you better get a STEM degree outside of it. If, you know, be a doctor, be an attorney, you know, but don't get a vague communications degree, you know. This is what I teach my kids. Engineering, 100%. Get STEM, get engineering, become a doctor, you know what I mean? Like like get a STEM degree. That's what you focus on. Do not get a business admin degree like every other kid that doesn't know what they want to do. Not unless you're gonna get an MBA. And again, I've given this argument before and I'll say it again. I truly believe we need to bring back placement tests to get into careers as one of the only necessity to get into it, as well as the oh dude, my brain fart. I can't think of what I'm trying to say. As well as the apprentice system. Bring back the apprentice system in a real way. You know, like back in the day, if you pass the bar and you work as an apprentice under a legit lawyer for however long you needed to, you become an attorney. You know, you're now a lawyer or an attorney. Regardless of whether you went to school, regardless of whether you went to college, you pass the bar and you work as an apprentice, boom, you're an attorney. You know, if you're smart enough to pass it and you find an apprentice system, you find somebody to work under as an apprentice, you get your law degree, or you become an attorney. And I think that's how it should be done. You know, that's how it should be done. Big money and big educations got involved, and then they just want you to keep going and keep the wheel churning and all this stuff. And it's bad for people over time. Eventually, it's gonna make it so that it's virtually impossible to do anything. And I would argue you probably learn more in that type of system than you do at a freaking getting a master's in law. To a certain extent, you know. Yeah, trade schools are great. I was explaining this to my kids too. Trade schools are great. The ceiling is a little lower with trade, but you know, you can make good $150,000 pretty easily in a lot of trades, you know. Making more than that is more difficult. You have to start your own practice. And that's possible too, but I don't know why Christmas music's playing. All right, guys, we are going to start trading today. Again, market is up. I might start buying this dip. It depends on how the market reacts to this labor report that we're seeing here. All right, so we did a poll here, bearish or bullish on today's job report. 53% are bearish, 47% are bullish. 53% are bearish, 47% are bullish. Yeah. Well, I mean, college loans are very predatory as well, and I think everybody understands this. They're the only non-forgivable debt you can get in. And so I think it has to do with more so, look, I made a lot of dumb decisions when I was 17, 18, 19. I'm just lucky I didn't get myself in a deep debt with college loans. But yeah, it's the only non-forgivable debt in the world. Kind of, in the country, I mean. Right, but that's my point, is that a lot of these are super, super predatory. All right, guys, so NASDAQ, I'm looking at this. Some levels I'm looking at on the NQ are really 23.1 right here. Psychological levels confirmed multiple times. We got the 200 exponential up here. And because of that, I'm looking at this 25 level above us. I think this level is confirmed. We might even be able to look like at this, but I'm going to put it at 25, kind of round it. We got some isolated levels up here, but I'm going to look at 150 right there as well. And then we got this isolated low down here at like 30. I'm looking at. And these are some levels that I'm watching close to where we're at now. Here's the 200 exponential at about 115. Yeah, I mean, I think over time you learned. Like when I was a kid, I had terrible impulse control. You know, I had ADHD, so I was bouncing all over the place. Terrible impulse control. It was fun and exciting. I wanted to do it, even if it wasn't necessarily the right thing. Over time, though, you learn. You really do. Like, you learn how to have a little bit better willpower. You know, you kind of overcorrect, I think. At least I did. Like, I overcorrected. And I think that's a lot of people. All right, so we're at 45 minutes left until the NFP non-farm payroll and unemployment report. Buy at 626. We got Microsoft down there. Again, the labor report is expected at 106 today, previous of 147. A big decrease expected month to month. Unemployment expected at 4.2% versus 4.1% last time. Remember, we also have the U6 unemployment rate for July. Last time was 7.7%. We'll see what it shows up as this time. Private payroll is expected at 100,000. So private payrolls are expected to uptick. Last time they were 74K. Today they're expecting 100,000 for these. So yeah, and the thing about being an entrepreneur is, like, I actually think the path to success starting your own business is much easier than anything else. You know, like, there's a very common stat that floats around, like, business circles, and it's 1 out of 6 businesses succeed, which means, like, 5 out of 6 fail. And people look at that like it's some pessimistic, negative thing. I honestly don't. I think what that means is that you just keep chipping away at it. Eventually, one's going to stick, and that might pay you forever, you know? And so you just got to keep trying, you know, learn a little bit every time and keep trying. Eventually it's going to stick, for most people, if you keep trying. Most people try once or twice, fail, and then they never try again. And I think that's the worst way you can do it. You know, right when your odds are getting better, you stop. But a lot of people are not going to have it that easy. You got to be smart with it too. But if Powell knew the job numbers were bad, why did he cut rates? He paused rates. He didn't cut rates. Rates are high still. Why do you think Robinhood is down more than Nvidia? Well, it probably has to do with how much Hood is up on the year. Robinhood is up a huge amount. Robinhood opened in 2025 at about $40 a share. It's now at $104 a share. Nvidia, on the other end, opened the year at about 140. It's at 180. So just in terms of like percentage increase on the year, Robinhood is up way more. You know, Robinhood is up like over 100% on the year right now versus Nvidia, which is up whatever that is. Oh, so you probably mean why didn't he cut rates? Well, we need more than one bad labor report to justify rate cuts. Is probably what it is. We need more than one bad rate cut to justify. All right, Nasdaq's bouncing here. We just ripped over that 125 level. We could watch 130. I think 130 is actually a little bit more reasonable of a level. This 128 spot's pretty big, so we'll keep it there, especially after this confirmation right here. We got a lot of rejections there, so I think I'll just leave that one up. Yeah, look at Fig, man. Fig up to 136, almost 140s. Still creeping up. Nvidia rising back up to almost 175. Yeah, Robinhood is down. Take a look at Robinhood. I know they had earnings. Robinhood's down probably because Coinbase is down so much, is what Pawn is saying. Sympathy due to crypto transaction being way down, and people thought Robinhood ETF, crypto ETF would increase a lot more of their revenue. And again, Bitcoin down to like what, 115s today? Yeah, so the White House announced a new trade policy effective August 7th. Protectionism with universal tariffs. 10% remains on countries with the U.S. as a trade surplus. 40 nations with U.S. trade deficits face a 15% tariff. Canada's tariff rate increased to 35%, though goods compliant with USMCA are exempt. Specific countries like Syria is at 41%, Myanmar and Laos at 40%. No trade deals were struck with African nations, leading to tariffs of 15 to 30% for African countries. Companies like Watches of Switzerland facing cost increases due to 39% tariff on Swiss imports, 7% drop in London. Again, Moderna came out, they're saying they're going to cut 800 jobs this year as it burns through some cash as well. Lumen says it has a new asset in tow as it chases more AI business. All right, so look at this big negative reaction here. I will short this if we get an opportunity to. Bro, what is it with all the freaking Christmas music here, dude? The Palantir could justify 450 PE. I mean, relative to current earnings, 450x is 450x, meaning Palantir price is 450x its earnings, though it's still high. I mean, I like Palantir as a company, and I think it's running on momentum, not fundamentals and interest. It could catch up to it. We'll see what the Palantir has earnings Monday, so we'll see what the earnings look like. Speaking of Palantir, here's PLTR right there. Again, it has earnings Monday. We'll see what that looks like. All right, guys, we got 40 minutes left. 40 minutes. Market's down. Amazon's down pretty significantly from earnings yesterday. So Amazon's down big. All right, so Nasdaq's still pushing up here. Very choppy range though. Look, we're basically sideways, but big range here. We did bounce right there. I think we should also look at this low here, of course. Right here. Trying to draw out some levels, but it's not easy to make money right now. We are pulling back down to the 200 exponential. I guess I could try to buy this. Let's see. We're kind of volatile right now. Depends on what you guys think the labor report's going to show. Labor report shows strength. If the labor report shows strength, it might confirm what Powell said, which is that inflation's the risk. You know, we did have PCE inflation show up at 2.8 versus 2.7% for core PCE year over year. So I took 2 contracts here. We'll see if we get anything good. This is my 50K funded account. Do me a favor, slap that like button, hit that subscribe button, chat. We appreciate it. So now we're dipping down here. I'll probably end up selling this under the 200 exponential. And we'll wait. Look for one down here maybe, but I really gotta start trusting my algos here. Here's my algos. The last 3 out of 4 worked. Like, look. 1. Boom. Nice bounce. 2. Literally called the bottom. Nice bounce. 3. Literally called the bottom. Nice bounce. This one didn't really work. I mean, it came in here. It actually dropped a little bit below this, but, you know. But, pretty good. Pretty good. If you wait for it during market hours, it's actually even better, too. So. Fair market power agreed with me. Bulls need to be... I don't know if they need to be punished. But... Powell was more hawkish and inflation fearing. I don't know if I'd call that bear market, but didn't you say the market would be down big? Like over the last year? We broke all-time highs a couple days ago. I don't think there's a good labor market to give out positive report numbers. When there's so many layoffs because of AI. Yeah, you might be right. So we're looking at this level up here. We got the 200 exponential right below us, but we're really not moving. I think the whole market's apprehensive waiting for this labor report to show up. It's an algorithm I built. Yeah, FIG at 135s right now. About gold? Gold this morning here. Up, elevated with red market. I'm sure the VIX is higher too. Yeah, VIX is up to almost 20. Oh, okay, we got about 35 minutes left. Hit that like button, hit that subscribe button. We appreciate it. Thanks so much. I only got some stuff to do, but... Yeah, we got Michigan consumer sentiment and ISM. I think it's ISM manufacturing PMI today. Yeah, ISM manufacturing. We got Michigan consumer sentiment and inflation expectations. Got the FIG IPO sold at 115. That's pretty solid. Congrats if you did. That's still pretty good. All right, we're at 33s. Yeah, Ed, you might be a little delayed on the stream. Hit the log button next to the play button. All right, guys. Nasdaq still creeping up. I could have held this long, but market acted very choppy. Again, here's the VIX, elevated today up to almost 20. SPY is down, but again, a lot of stuff broke all-time highs. Like the SPY broke all-time highs yesterday. This is after Meta, Microsoft, Amazon, Apple earnings over the last 3 days. Amazon reacted negatively. It's down pretty significant percentages. If you take a look at Amazon here, it's certainly helping to pull the market down. Amazon's down like what, 12% today, so big. If you take a look at Amazon here, there it is. Take a look at Amazon. Here's where it closed, and then Amazon is way down here now. Closed at 234. It's at 215. So big percentage for Amazon down. Not as much as it was. It's about $20 a share. Amazon's about $200. That's about 10% actually right now. So it's not down 12%. It's down about 10% right now. Maybe a little bit less than that actually, if it is 234s versus 235. If it's less than 20 a share. So yeah, Amazon down about 10% right now. Still not good, but not 12. Apple is slightly green and slightly elevated from earnings. Apple closed at 207, dropped earnings. It's now at 211s. So was that $4 a share? About 2% gap up for Apple. Just doing the math in my head. Might be wrong. About 2% gap up for Apple. Again, Microsoft had earnings on Wednesday. It's elevated today. It's up, what is this? About $5 a share for a $500 stock. It's up about 1% for Microsoft. What else do we have? We have Meta. We had Apple, Amazon. Meta, on the other hand, is down on the day. Meta's down about $7 a share for a $700 stock. Meta's down about 1% right now. So we'll see what happens here. We'll see what happens. Google down as well. Was at 193 roughly. It's at 190 now. Down about $3 a share. All right, this 128 level still holding, pushing it down for markets. We got 30 minutes for payroll numbers to drop. And yeah, we'll see what happens here. But so far, markets are flat. Fig IPO been running big. It's at almost 138. Again, just to give you guys the big stories of the day here. Fed's Bowman says, I see the upside risk to price stability have diminished as I gain even greater confidence that tariff will not present a persistent shock to inflation. I think we should start putting more weight on risk to our employment mandate. So Bowman is now speaking here. Says with growth slowing and a less dynamic labor market, Bowman saw it as appropriate to begin gradually moving the moderately restrictive policy stance towards a neutral setting. And so remember, she was one of the dissenters yesterday. She's coming out with some posts. Waller also explains the dissent. Concluded that by cutting 25 basis points, the appropriate course of action. GDP was 3% earlier in this week, so 3% yesterday. Was it yesterday? No, Wednesday. GDP was 3% Wednesday. But yeah, you can see Bowman and Waller's comments in the chat right now. Yeah, Ed, I think you might be a little delayed on the stream. Hit the live button next to the play button, my friend. I agree with you on most of what you're saying regarding loans, but you are a little delayed on the stream, my friend. All right, so it's now August 1st. We are no longer in July. Hey, what's up, CT? Yeah, all good, brother. We'll see. And so we're starting to push up. We're at 128, 128.75. Yeah, so again, Fed Bowman said with growth slowing and a less dynamic labor market, they saw it as appropriate to begin moving the moderately restrictive policy stance towards a neutral setting. Still rejecting here at this level for the NASDAQ. SPY's trying to come back up. Big pulling back a little bit. NVIDIA up to 175s as we speak, though. So here's NVIDIA. Again, I think we got to take a look at gold as well. Gold elevated today. Dollar index elevated today. VIX elevated today. So yeah, so 51% say bullish, 49% say bearish on this poll. Interesting. OpenAI has raised 8.3 billion and a 300 million, or at a 300 billion evaluation, months ahead of schedule. This might benefit Microsoft. Where's Microsoft at? Microsoft's a little red on the day, or no, Microsoft a little green on the day. It's at 538. So he already did. So the president came out this morning, just to give you like a rundown here. Just to put this into perspective and kind of give you like a rundown. The White House announced new trade policy effective August 7th. So he pushed it back about a week to August 7th. He shifted towards protectionism with universal tariffs. A 10% tariff remains on countries with which the U.S. had a trade surplus. 40 nations with the U.S. trade deficit face 15% tariff minimum. Canada's tariff rate increased to 35%, though goods compliant with USMCA are exempt. Countries like Syria, Myanmar, and Laos face higher tariffs. No trade deal was struck with African nations as well. Investors are cautious, though. Goldman Sachs credit strategists warned that global corporate credit spreads the lowest since 2007. Advise hedging, according to Bloomberg. NASDAQ still creeping up a little bit. We got 26 minutes, 24 minutes, until the payroll report goes live. Make sure you hit the like button next to the play button, hit the subscribe button, chat. We appreciate it. It's a really important labor report today, based off of everything else that happened. Here's the TNX, the 10-year treasuries. Yeah, they are a little hawkish, a little elevated today, to be honest. Treasuries a little elevated, a little hawkish. Yeah, people are pretty mixed on the poll, on like what's going on. So we'll see. Yeah, this labor report is big today. Again, let me know in chat. Are you bullish or bearish on today's labor report? Non-farm payrolls, unemployment drop 8:30 Eastern Standard Time. We got Michigan consumer sentiment at 10. We've got ISM manufacturing PMI at 10. We have a lot of other stuff dropping today too, to be honest. A lot of stuff. So again, let me know what you guys think. We got about 1,000 here already. Again, be ready. Let me see what the people have to say. John, your levels are spot on. Hey, thank you. Are you having any mid-cap AI or chip stocks you're bullish on? It's low volume, guys. Again, you got to understand why it's low volume today. People are saying, oh, it's low volume Friday. It's not because it's Friday. It's not because it's August 1st. It's low volume today because we got 22 minutes until the labor report comes out. And traders understand if the labor report comes in good, markets might go well. If the labor report comes in bad, markets might not go so well. And so traders are much more apprehensive today because we have a major report dropping in over 20 minutes. That's what's going on right now. So things are, again, NASDAQ's down, S&P's down, Apple's down, Amazon's up, or no, it might be up. Apple's up, Amazon's down 10%. Nvidia is, where's Nvidia at? Nvidia's down as well. So a lot of stuff is down. The VIX is high. Apprehension is high because of the labor report and more coming out today. Again, 8:30 Eastern Standard Time. I'm gonna I had to kind of add the 8:30 labor report. 8:30. NFP data expected over 100, but big pullback expected. Last time was 147. This time they're expecting 106. Hey, what's up, Pio? Are bonds down or are yields down? Bonds are down. Yields are elevated. So again, just to give you guys, like, if you want to watch yields and bonds, even if you don't trade bond markets, watching bond markets are very is informative versus monetary policy and market sentiment. So if bond prices get sold off, like I look at TLT, which is like 20-year, I think, or longer term for prices, you can see prices are down. And so what does that mean? I don't even have to look at yields. I know yields are going to be up. If bond prices are down, yields are up. Supply and demand, they inverse each other. So if yields are up, bond prices are down. If bond prices are up, yields are down. That's how it goes. Yields and interest rates follow each other. So if yields are down, interest rate sentiment is lower. If yields are up, interest rate sentiment is higher, right? Like, that's how you watch bonds. Now TLT and TNX are like two different time frame. TNX is 10-year yields. TLT is 20-year bond prices, I think. Yeah. 20-year plus, so longer term bond prices. But even that dynamic, you can still watch it with these as well. Any particular reason for market crashed today? Crashed in past tense? Market has not crashed today, sir. Market is down a little bit, but we're still pretty close to all-time highs. We're nowhere near a crash. The closest thing to a crash was Amazon down 10%, but even that's not considered a crash. And that's just an earnings reaction. Amazon had an implied volatility that was kind of high anyway, so the reaction to its earnings is big, and we had some follow through overnight for Amazon. Amazon's down about 10% this morning. Apple's actually slightly green. Nvidia's slightly red. Microsoft's green. Apple's green, like I said. So we have some tech that's green, some tech that's red. Overall, though, the NASDAQ and the S&P are down slightly today. They're not slightly, but they're down some, not a huge amount. Everybody calls everything a crash. All right, guys, we got 20 minutes left. Nvidia's still climbing higher, though, and you see the NASDAQ. I'm looking at 23,150. This is a big pullback. Remember, the all-time highs on the NASDAQ were like 21.8 or 23,850 or something like that. We're at 23.1s. So we've pulled back like $700 on the NASDAQ over the last few days. And so percentage-wise, it's not the biggest, but still, it's not nothing. Sure. Yeah, I thought Amazon's earnings were actually pretty good. I think the operating margins is what affected them. Yeah, FIG's been a really interesting IPO. We've been watching it. We're up to almost 140 on the NASDAQ. So we're starting to creep back up. We're down big, though. I would guess the momentum's on the upside just based off of extension. But you never know. All right, Nvidia up to 175. Should I make this a scroller too? I was thinking maybe I should scroll this this main bottom one. I can scroll it a little bit. we should slow the scroll of this one too. All right, guys, NASDAQ still creeping up here. All right, so we're going to end this poll. We got about 650 votes. I'm going to do another poll. Does today's NFP payrolls, does today's NFP report go higher or lower than the 106K expected? Higher, lower, and then we're going to have as expected as another one. Today's NFP report show higher or lower than the 106,000 expected. Basically, it's the labor market stronger week versus expectations today. Another important aspect of it. All right, so we're at 23,128. Now, remember, we're still in the dead heat of summer. So, let's see if we bounce here. I might buy this dip now. Although, we do have a sideways choppy sentiment here, but let's see if we can add something to this. I want to see if we retrace bouncing off of 128 level, which held us such like a big resistance area. And then, I guess not, just a big sell-off to it. Well, we're red on the day. It's not a huge red. But I'm not really happy about it either. That's a big pullback. President posts strong dissents on the Fed board. It will only get stronger too late. Again, so the president said, quote, strong dissents on the Fed board. It will only get stronger too late. More pressure to Powell. Do you agree with him? Yes or no? Let me know in chat. That's a 48%. 50% of people think we're going to come in higher than expected for payrolls. They think payrolls are going to be stronger than expected out of almost 100 votes already. 37% think lower. So we're still pretty split. 50 to 40% higher or lower. And then 13% to 10% think as expected, a flat reading here. Again, 15 minutes. Yeah, Powell basically said on Wednesday we're lucky he doesn't cut rates. Or we're lucky he doesn't raise the interest rates. I think if he did, it would be chaotic. But that's what Powell said. I guess we got 15 minutes left. Payrolls expected anywhere between like 105, I would say, and 115 is reasonably what they're expected at. Do you guys like the expectational number in yellow scrolling like it is? Michael Saylor says strategy could buy as much as 1.5 million Bitcoin. Hmm. So now we're back down to the 200 exponential, very flat range. Maybe at the very least payrolls will give us some volatility. So again, Bowman came out. Greer said he's confident about rare earth flows from China. So Greer did come out with that. 5 million business users are paying for Chat GPT, according to New York Times. But again, U.S. Trade Representative Greer said, I am confident about rare earth flows from China. OpenAI annual recurring revenue, according to the New York Times, is going to be seen at 20 billion by the year end, according to them. Market has a very, very small range ahead of this payroll report. Very, very small range. All right, guys, here we go. Less than 40% chance of a rate cut in September. Yeah, it pivoted. It was at 65. Now it's 40. So it's at 65. Now it's 40. If you look at the CME rate tool, 41% chance of a 25 basis point cut. 59% chance of no cut in September. October is looking like 48% chance of a 25 basis point cut, 16% chance of a 16% chance of a 50 basis point cut, 37% chance of no cut by October. And then if we look at December here, still a 16% chance we don't cut at all this year, right? So this is no cut at all. Right here, no cut. No cut in 2025. So again, almost 16% chance of zero cut this year in 2025. And again, I'll give you guys the scenario in which that happens. The scenario in which that happens is that payrolls come in strong today, inflation stays elevated, and we continue to see strong payrolls, strong GDP, low unemployment over the next 3 months. We continue to see strong payrolls, low unemployment, and elevated inflation data over the next 3 months. That's a situation in which we are probably not going to cut this year. If payrolls keep coming in higher and higher and higher, that's a situation where we might not cut. If inflation is a risk, right? Because the Fed, in order to justify a rate cut, they have to have price stability as well as some weak economic signs, like weak economic signs, right? 3% GDP, not the weakest. This is Powell's argument. I'm not saying I agree with it, but Powell's argument is strong GDP, low unemployment, inflation risks, right? So if we get confirming data regarding all that stuff over the next 2 to 3 months, we're not cutting rates this year. Now, I don't think that's going to happen. I think we'll at least get one cut this year. I don't know when it's going to be, though, at this point in time. You know, prior to the meeting, we thought September. That has decreased. We still got a 40% chance of a cut in September, but it certainly is not like high, you know. If you want rate cuts, yeah, you're going to want weak payrolls is essentially what you want. Yeah, MicroStrategy. Crypto's down big, though. If you look at Bitcoin, Bitcoin's down almost to under 116 for Bitcoin futures. Hit 114s early this morning, so Bitcoin's down. All right, guys, we got 10 minutes left. 10 minutes. See what this labor report shows. It's a big report for sure. Powell's rate cut argument is a farce due to him not cutting last year. But I've talked about this already. So and look, I'm not necessarily saying you're wrong, but Powell cutting at the end of last year benefited the current administration mostly. It benefited the previous one some, but it benefited the current administration mostly. Why? Because there's a lag to rate cuts in a lot of areas. And so him cutting in December certainly benefited the January 18th president versus the previous administration. Now, it did benefit and have some initial effects to like the bonds market and all that stuff, which does impact mortgages and everything else. But cuts last year benefited. I think, look, I don't think it's super obvious. I think you can go either way, honestly. I think you go either way. I think we cut a full 100 basis points at the very end of last year, leading into this year in 2025. And so, but I also don't want us to go into a recession or depression necessarily. So Greer said he will be finishing paperwork on deals over the next weeks and months, according to Bloomberg. He said his confidence rare flows from China, according to Fox. All right, guys, we have 8 minutes left. All right, guys, here we go. 8 minutes. Hit the live button next to the play button. If you put it in 2x speed, you won't miss any data release. I know sometimes people get like back, but if you put it in 2x speed, you shouldn't miss any data release. Yeah, no, I understand the argument, Ty. I'm not even saying you're wrong either, to be honest. There's certainly at least a little bit of that going on, I'm sure. But people acting like the 100 basis point cut we did at the end of last year only benefited the previous administration. I mean, that's just objectively not true. So there's a reason the economy has been resilient to tariffs to a certain extent as well, you know. But all right, guys, NASDAQ moving up is also, I think unemployment will be higher than 4.2%. Yeah, it's expected at 4.2. That it's actually expected to jump up a little bit from 4.1% last time, but we'll see what it looks like. All right, guys, 7 minutes. And again, this labor report's big. The market's pretty choppy leading into this report as well. So the market's very choppy leading into it. We got the NASDAQ on the left. See what it does. Yeah, Apple's up today. Amazon's down 10%. Tech is really interesting leading into this. All right, guys, less than 6 minutes left. We're getting close. Hit the like button next to the play button. Hit the like button next to the play button. Put it in 2x speed. Hit the like button on the stream and subscribe if you haven't yet. We appreciate the love. We're ticking closer and closer to this report. And again, this is not just the only report today. We have a lot of reports today, to be honest. So we have a lot of stuff coming out today. A lot of stuff. Payrolls in 5 minutes, but we also have ISM manufacturing PMI at 10. We've got Michigan consumer sentiment and inflation expectations at 10. We have a lot more stuff dropping. But this labor report's huge. Five minutes left. Will Apple fly today because of earnings? Hard to tell. Apple's up a little bit, but whether it's going to go up today from earnings, we don't know. Nobody knows. Variance is high. It could. Might not, though. Might drop. I think a lot of markets are just waiting on this payroll report. Will higher unemployment be good because it'll make rate cuts more likely in September? It's possible that that's a nuance and dynamic today. It's possible. You know, we also might see something with weak payrolls. Market could react positively because it means a better chance of rate cuts next meeting or next decision in September. It doesn't mean it's gonna happen, but it's possible for sure. You know. If the market wants rate cuts, that's a dynamic that could happen. All right, chat. Here we go. I'm going to put gold up on this side, too. So, and I'll write gold. Wait, y'all can't see that. Hold on. All right, chat, 3.5 minutes, a little bit less than that, actually. Are you guys, is your heart beating yet? Let's see what happens. I'm gonna catch some knives. We'll see. Hey, we'll see if the market falls. I'm ready for it. Again, remember, guys, non-farm payrolls expected between 105 and 110, 115. Last time they were 147. So we are expecting a pretty big dip prior to this payroll report. A pretty big dip prior to is expected for this payroll report. Unemployment expected at a slight uptick. So weak economics expected month to month. 4.2% is what is expected at today for unemployment versus 4.1% last time. We also had the U6 unemployment rate come out at 7.7% last time. That one we don't really have an expectation, but it's relevant to watch. relevant to watch. All right, guys. 2 minutes left. All right. Get ready, guys. We got about 1 minute and 45 seconds left. All right, guys, 1.5 minutes left. Hit the like button next to the play button. Nasdaq's very choppy. All right, here we go. We're waiting. All right, 1 minute. We got about 2,000 here, guys. We got 1 minute. Hit the subscribe button. Hit the notification bell. We appreciate it. Let's see what we show. Yeah, make sure you hit the live button next to the play button as well. 50 seconds. $45 seconds. All right, guys, here we go. We got 30 seconds left. Hit the live button next to the play button. All right, guys, 20 seconds. All right, here we go. All right, so this timer's a little bit early here. We still got about 5 seconds left. All right, guys, let's see what it shows up as. And the report goes live right now. Non-farm payroll, 73,000, way lower than expected. 73K versus 106,000 expected. Unemployment, 4.2%. 73K versus expected 105K. 105%. Unemployment showed 4.2% versus the expected 4.2%. Weaker than expected, guys. Weaker than expected. Noticeably weaker than expected here. NASDAQ is down significantly on this report. Weaker than expected. Much weaker than expected here. Again, 73K. Again, let's take a deeper look at this unemployment report. But, man. Yikes. Weaker than expected here, chat. Weaker than expected. All right, so here's this report. NASDAQ originally reacted negatively here just to break everything else down. So again, average hourly earnings came in at, as expected, at 0.3%. The U6 rate came in higher than expected at 7.9%. You can see gold spike. Unemployment 4.2%, 73,000 for non-farm payrolls. Private payroll showed 83,000, lower than the 100,000 expected. So noticeably weaker employment report than expected. Noticeably weaker employment report than expected. Again, stick around. Let's take a look at this report and we can watch the NASDAQ as we do here. But look at this. So total non-farm payroll changed little in July at 73K and it showed little change since April. The unemployment rate at 4.2%. But the unemployment rate at 4.2% and the number of unemployed people at 7.2 million changed little in July. The president is almost certainly going to say something regarding this. Is almost certainly going to say something about this. The number of people in the labor force who currently want a job changed little in July at 6.2 million. Among those in the labor force who wanted a job, the number of people marginally attached to the labor force changed little at 1.7 million. 73,000 showed little change since April. In July, healthcare added 55,000 jobs, the average monthly gain of 42,000 over the prior 12 months, so higher than expected for healthcare. Social assistance employed continued to trend up in July at 18,000, reflecting job growth in individual and family services. Federal government employment continued to decline in July at negative 12,000 and down by 84,000 since reaching a peak in January. Employees on leave or receiving ongoing severance are counted Employment showed little change over the month in other major industries, including mining, quarrying, and oil and gas extraction. But again, 77,000 or 73,000, I'm sorry, for payrolls versus 105 to 115 expected. So noticeably weaker than expected. We can take a look at yields, and yields are dumping down on this report, guys. Dumping down on this report. Again, a weaker economic report shows more of a need to cut rates, not less, just for everybody at home. Again, manufacturing payroll showed negative 11,000 versus negative 3,000 previously of negative 7,000. 4.2% for unemployment. Non-farm payrolls 73K. 73K. We'll put this up on screen here. Put all the reports on screen passing through. First, we're going to put up non-farm payrolls and unemployment at 4.2%. We're going to put manufacturing payrolls up. We're going to put the U6 rate up as well. But yeah, weak payroll report, to be honest. Not good. NASDAQ is down pretty significantly on this too. Look at the NASDAQ drop. Look at gold spike on the right side here. And look at yields fall. So interesting. It's definitely a bearish report, I would say. I mean, I don't know. Again, we talked about this before. Is this worth buying up? Because does this mean earlier rate cuts than expected? You know, people are saying Jackson Hole. Look at gold spike. This is really beneficial for gold. Gold is moving up. Bitcoin's actually moving up on this. I think it means earlier rate cuts and people are more optimistic. Yields are going down, showing a lower interest rate sentiment from this report. Yeah. Interesting. All right, guys. Yeah, look at the NASDAQ test this 60 level we have on our charts. It doesn't mean it's going to hold. All right, so May was originally reported at 144,000 jobs. It was revised down to 19,000, 125,000 fewer jobs than first reported. In June, originally reported as 147, it was revised down to 14,000, 133,000 fewer jobs than expected. Combined May and June job gains were revised down by 258,000. So if you want weak economics to justify rate cuts, there it is. These are significantly larger than normal downward revisions, which may suggest the labor market was weaker than previous believed going into July. The large negative revisions often influence market sentiment and Fed policy, and so it adds weight to the idea that the labor market is cooling faster than anticipated, even if headline unemployment stayed under 4%. So interesting here. Yeah, very interesting. Again, we put the revision summary on x.com at beginner trades if you want to check it out. At beginner trades if you want to check it out. We broke it all down. We put everything in there in the report as well as everything else. Yeah, I mean, again, if you want rate cuts, this is certainly more of an argument for rate cuts. It almost is to the point where I might buy this up. Because we talked about that nuance earlier. Should I try? Try. Small. I'm gonna buy up small. It's risky to do this. But hey. There we go. Yes, sir. Alright, so I'm gonna wait. I'm gonna try to sit on this long term now. I'm gonna try. Again, just be careful. Be careful. Yes, sir. We're gonna add to this now. Again, this might be an earlier rate cuts. Let's take a look at rate odds. Yields are certainly down from this. Okay. We added a little bit to this. Now we're gonna take half of that off and we're gonna sit on the rest. Very green on the day. Alright, we're up 60 ticks here. I'm gonna go ahead and cut that right there. We were absolutely right about that rebound. We bought it up. It looked really nice. And we might continue higher here. Remember, sometimes the first move is the wrong move. Private payrolls did come in lower than expected. Every payroll report mostly was weaker for the economy than expected. Again, U.S. manufacturing, 11,000 loss versus expected 3. Private payrolls, 83K versus 100K. U6 was higher than the 7.7 last time. It's 7.9% this time. Manufacturing payrolls negative 11,000 versus negative 3 expected, previous of negative 7. Just overall a much weaker landscape for the labor market and the economy than expected here. Let's see. I'm just waiting for the president to comment on this. He has to comment on this, right? This is what, if you're the president, this is almost what you want to. It's not what you want to see, trust me, but it certainly confirms your argument a little bit more. And so I'm definitely open to see it if he comments on this, and we're gonna cover it as it happens. Again, subscribe, hit the notification bell. We appreciate this so much. Thank you so much, guys. We're gonna keep growing. Let's take a look at the rate odds now too. Here's the rate odds for September. I don't think they've moved yet, but let's watch this to see if they do move. Gold all the way up to almost $3,400 right now for gold. Look at my levels. Look at that level. $130, $128. Look at where we bounced too. I mean, look. We bounced literally right here. We rejected literally right here. We bounced literally at the 61 level too. So it's good to see that even with the volatility of these data reports, that the levels I draw, they work. All right, gold spiking up, Bitcoin up a little bit. SPY is very small range, but we're starting to rebound back up a little bit. Let's see what happens. This is definitely better for cuts, for sure. I mean, it means weaker economics. If this came back, if this came 2 days earlier, we'd see a rate cut. No, we wouldn't. It's too close to the actual meeting. If this came out a month and a half ago, I'll put it this way, if they revise some data today, okay, we posted this earlier. They revised some data today. The revision was for May, originally reported 144,000 jobs. They revised it down to only 19,000. So if that original number was 19K in May, and then for June, they revised it down from 147 to 14,000. So if those revisions weren't revisions and they were just stated plainly during those labor reports in May and June, that is the situation in which we could have certainly gotten a rate cut Wednesday. That is certainly a situation. And so the revisions paint a bleak picture of the labor market over the last 3 months. And so to be completely honest, and I said this before you even got these revisions, I think you probably could argue a rate cut on Wednesday. And again, I think people politicize this too much on both sides, right? Like anytime you see weak labor markets, certainly like with the revisions, this payroll report paints a bleak picture of the economy over the last 3 months. Right? 4 months. Regardless of whether you agree with Powell that we shouldn't cut rates and that inflation's a big risk, you know, is a different thing. It certainly shows that, in my opinion, and it's subjective, that we could cut rates. We could have cut rates on Wednesday. I understand fearing inflation. Look at this level too, 150. Bro, I gotta trade my levels more. I know I say this every day, but we literally make a pit stop. It doesn't always follow, like, it doesn't always reject and go back down, but we always kind of make a little pit stop at my levels here. Look at this one. We went down all the way down to here, whatever that number is, and now we're retesting it. So, see what happens. But again, this is not the only report today. We got a whole bunch of reports coming out live too. Again, does a weak labor report pump markets? It looks like it does. We talked about this nuance prior to the stream, and it's why you should subscribe to the channel here, because this is what happens. Labor report is out. Noticeably weaker than expected. Noticeably weak. Yeah, so he already said that earlier. I'm waiting to see if he comments about this labor report today. Bad news is good news. Yeah, are we back to a bad news is good news market? I think we might be. We talked about this dynamic before the payroll report, which is that anything that might increase the odds of a cut is going to make positive impacts to markets. And I certainly think this labor report increases the odds of a cut. Now, I don't think we're going to get an emergency cut, but it certainly increases the odds of one for September, I'm sure. I think it's at least going to have somewhat of a positive impact. I mean, we can look at bond yields falling after this report. Bond yields, we can look at that. Still checking the odds here. Yeah, so the odds of a September cut have just increased over 50% again for September. We now have 53% chance of a September cut, over 50% chance now after these revisions. The revisions is really what gets it. Again, the revision data is bad, right? May revisions all the way down, both, just to put this into perspective, originally, both May and June payrolls were over 100,000 for both of them, I think, right? Let me see. Let me make sure this is right. Yeah, both of these were originally reported in the 140s, 144 and 147,000 respectively. Both of these were revised down to low double digits. Or no, not double digits, but both of these were revised down to under 20,000 for each of them, under 15,000. Or no, under 20,000 for each of them. The first one at 144 for May was revised down to 19,000. Under 20K for both of them, revisions down. It's over 200,000 payrolls revised downward. The one reported for June, originally at 147, has been revised all the way down to 14,000. This is the weak economic report that's really influencing these. More so, I mean, we had a weak payroll report today. But the real question you have to ask, I think, on these reports is today's going to get revised down too? You know, today we showed up for payrolls at 73,000. Is that going to get revised down too next month? I don't know. But now the odds of a September cut are up to 50, almost 53%, 47% odds of a pause. And so this data is certainly confirming for the president versus Powell in the battle back and forth. Also, you want to help support the channel, check out Top Step. Great way to learn how to day trade. Most day traders lose money. I don't even claim to be a good day trader, but most day traders lose. Doesn't matter what course you take, who you follow, you're probably going to lose day trading. Okay, so you can either fund your own account, thousands of dollars, and let's be real, probably lose it for your first account, or you could try a funded account program. Top Step's the most legit. They give you a 50K demo. It's $50 a month. If you pass it, 50K funded account, 90% split. If you fail, you lose $50. It's the best of both worlds. They pay out hundreds of millions, fund thousands. It's the best way to learn in a structured environment. And if you're good enough to pass it, you can get started for $50, start taking payouts. Some of the most reliable in the game. Zero commission on Top Step X. Again, they're a sponsor of mine. I'm biased because they pay me money, but genuinely useful for traders. And I'll put the link up if you want to help support the channel. Yeah, I appreciate it. All right, look at this drop. We're coming all the way back down here. The question is, do we get choppiness today? Do we get choppiness? I don't know. Again, if you want to check it out, I'll pin it to the top of the chat. Look at this decrease. Unrounded, the unemployment rate in July was 4.25%, which is the highest since October of 2021. It was 4.24% in May. So you can see the unemployment rate continuing to climb too. This is shared by a couple different people. Unemployment rate climbing. Should we have rate cuts right now, chat? Let me do a poll here. Let's do a poll, and I want you to participate in it. The 50% that said higher payrolls apparently were wrong. Should we cut rates in September? It's gonna be the poll. We're gonna keep it really simple. Should we cut rates in September? Gold flying up on this report. $3,400 an ounce for gold. Starting to get a little bearish now, though, in markets. Let's see what happens. Is this bullish or bearish for crypto? I mean, I would say it's bullish. Crypto wants rate cuts for the most part, right? They want economic stimulus. I'm sponsored by TopStep. There. I'm a contractor. I'm hired by TopStep as an independent contractor. But yeah, TopStep's great. They don't have affiliate program anymore. Is what they don't have. Fed being greedy. Without quantitative easing altcoins. Yeah, I mean, I don't think we should do QE. I certainly don't think we should do QE. I think today the labor report shows a little bit more of an argument for QE, but I don't think we should do it. QE might spike inflation more than everything else. I don't want to print money and you know, we don't need QE right now. Like do QE if GDP starts to fail, if we get consistent labor market negativity. But we gotta wait for that. Like if we're trending towards a recession, sure, do QE. But if we got 3% GDP, do not do QE. You know. Yeah. All right, guys. Labor report is out. Ooh. It's an interesting market. All right, looking at our poll numbers, we asked, should we cut rates in September? 73% of voters say yes, 27% say no. Is it good or bad data? I would argue it's very bad data for the labor market. Again, we had 200,000 plus revisions for June and May. 200,000 revised downward payrolls for June and May. That's a big decrease. That shows a much weaker labor market than a lot of people thought we had for the last 3 months, especially at 70. What would it show up at 73, 74,000 today? Noticeably weaker payrolls after this revision data came in. And so if we're talking about the health of the labor market, today's report is certainly bad. If we're talking about rate cut odds, though, like if you want us to cut rates, this might be a good thing because this is certainly going to increase the odds, and it already has. Like if you take a look at the rate cut odds, we are now at 63% likely of a rate cut in September. 63%. So this is slowly increasing higher and higher and higher. Bond yields are down. Rate cut and lower interest rate odds are high. Gold is spiking. And so if you want rate cuts earlier than expected, this is good. If you want a strong labor market, this is bad. Again, I expect the president to comment on this today. I really do. Will the president speak on this labor report today? Again, you can see all the numbers at the bottom of the screen scrolling. Will the president speak on this labor report today? I think it's possible. What you're saying is the initial reports were bogus. I mean, in this case, yes. May and June. Yeah, again, just to put this into perspective for everybody at home, in terms of the revision data. Okay, I'll draw this out. There's gold. Look at gold spike. Just to draw this out, okay? May was originally showed up at 144. Okay, this is what the original number for May was at 144. They revised it down. It is now 19. Terrible 9, but okay. It's now 19,000. June, same thing. June originally was 147,000. Now it is 14,000. Dude, Now it's 14K. So the revisions have been substantial. Huge revisions across the board here. Very weak labor market showing. Certainly confirms the president's. And again, you guys know me. I'm not really partisan in any way. Like I'm very neutral. If something confirms what the president's been saying, I'll say it. And this certainly confirms what the president has been saying. So again, I'm not really political. I go by policy. I go by what's actually going on. I try to be as objective as I can. This certainly confirms what the president's been saying. Now, see what happens. We also have Michigan consumer sentiment later. We're kind of flat in markets. It's my ringtone's the Ninja Turtle song. All right, so the president just posted on social media. He said, "Too little, too late. Jerome Too Late Powell is a disaster. Drop the rate." End quote. I knew he would comment on it. Yeah, so the revisions down for payrolls. Again, negative 258,000 jobs have caused rate cuts odds to increase for September. Now at, what is it? What are we now at? 63, 64%. Has this increased since I looked at it last? Yes, now at 67%. Yeah, 67% chance of a September cut. Trump post to social media. All right, guys. Yeah, so very interesting here. I might buy this. I mean, we're pretty green on the day here. Chop fest. Yeah, we're going up and down, big range here, but a very interesting report. And again, this is leading into the opening bell at 35 minutes. John blinked twice if you like CrowdStrike. I'm kind of neutral on CrowdStrike. Is the data sufficient enough for the Fed to call an emergency meeting? No, and I don't think they will. I don't think they will. I don't think they're going to call an emergency meeting. The optics are too bad for that, I think. And so I think they'd probably just cut in September and they would say, hey, with updated labor data, you know, we now think the market is sufficiently... All right, we now think, you know, the market is due for a less restrictive stance, monetary policy, and because of that, we're going to cut rates 25 basis points today. Is essentially what I think they're going to say in September now, if the labor market trends continue into September. Remember, the NFP report drops the first Friday of every month, right? So for September, the NFP report shows up on the 5th. So September, the NFP report shows up on the 5th. NASDAQ is starting to break down here. I mean, we can do an emergency cut. I just don't think they will. You know, we also have the Jackson Hole Symposium later this month, too. So, look at this fall down here. We're down to under 23,100 now. Very choppy market here right now. Very choppy market. But the rate cut odds have gone up dramatically here. Dramatically. All right, we're decreasing. Yeah, so Jackson Hole, he speaks. He doesn't do anything regarding monetary policy, but he speaks on outlook in Jackson Hole. And so we'll if you want to know whether we cut in September, we're going to be streaming Jackson Hole Symposium live, as we always do. Yeah, we're heading towards the opening bell. Just be ready. Let's watch that 60 level. Somebody help people get over these payroll numbers. Yeah, so again, President did comment on these posts. Taking a look at everything else though. SPY now pulling back a little bit. A lot of it's still green on the day. Bitcoin has reacted mostly favorably. Here's where the report came out. And then here is where Bitcoin has increased to. So Bitcoin over 116 that is. And again, look at gold. That's a bad gold drawing. Hold on. Wrote it backwards. Gold. There we go. Alright, so we're still breaking down. Let's watch 61s. Interesting markets here. Looking at our poll numbers, we asked people, should we cut rates in September? 400 plus votes already. 73% say yes, we should. How could anyone be bearish after seeing big tech earnings? I vote for deflation. Sure, it will be a house of pain short term, but cost of living is getting into civil war. Yeah, I mean, yeah, and rate cuts are going to increase the price of houses mostly, not decrease them. Yeah, the big revision to payroll freaking markets out. I think one cut in September and that's it. I don't know. Maybe. I was going to buy this dip at 61s, but we're kind of late on it now. I'll try. We can hold this break even now. We didn't need to. We made 30 ticks on it, like 5 seconds. Might as well take profit here. We got 30 minutes left until the opening bell. Look at my levels here, guys. Look at that level. Greatest level ever. Again, now this ain't all today either, chat. We got Michigan consumer sentiment and inflation expectational data coming live today. So we got stuff going on today. How do you draw your support and resistance lines? I close my eyes. Only for a moment, now the moment's gone, and I just draw, and I just click buttons. Just let the levels come to me. On a serious note, I draw by levels a mix of confirmed support and resistance, short term and long term. Obviously, you can see this is one, as well as a mix of half and whole dollars, milestone levels, and psychological levels. What I mean by milestone levels is like all-time highs, highs of the day, multiple confirmed support or resistance. When I mean half and whole dollar and quarter dollar levels, I mean like 23.1, 23.150. I look for isolated levels, so I look for isolation. So an example would be like this level you could probably draw as a resistance. Why? Because it's isolated up there away from everything else, and it's really obvious. See this level right here? It's isolated up there away from everything else, and so that's kind of how I draw them. A mix of everything. We have a couple of videos if you want to check the channel out to see how we draw them. But that's how I draw them. Pretty simple. I keep it easy, and as most people who watch the stream, I would say agree with, the levels are pretty solid. Those are magic lines. I don't think the government wants a recession anymore. All right, guys, less than 30 minutes until the open. Buying into gold now. Gold's up. It's almost at $3,400 an ounce. So gold is pushing. Gold is pushing. We'll see. Magic lines. It's a fake chart pre-recorded. Yeah. And I'm just AI John. Joking, of course, kind of. All right, let's take a look at rate cut odds, man. I'm watching this move, still at 67% likelihood of a September cut. Now, this is always subject to change. What might make these odds go down? A couple things that might make these odds go down. I would say the first and foremost this specific month, we got two big things this month. We got CPI inflation data going live. Not next week, but the week after next. CPI inflation data going live. We also have Jackson Hole Symposium later this month. So later this month, we have the Jackson Hole Symposium, which is where Jerome Powell goes around, or he goes to Jackson Hole, Wyoming, and speaks on current economics and outlook. That could move rate cut odds in a big way. We also have PCE inflation at the end of this month. So a lot of stuff going on. Look at this level reject here, by the way. But those are the big things to watch this month. Jackson Hole Symposium, PCE and CPI inflation, which we had PCE yesterday. PCE showed elevated inflation at 2.8% versus 2.7%. But that drops later this month, so we'll see what that looks like. $58 married, $2 million, mostly 401k. Can I retire? 401k. If you didn't say the 401k part, you just said 2 mil, I would say yes. 401k is the only hiccup there. Jobs data may be on a faster declining trend than anyone knew. My money is that today's NFP will be revised down too. That's what I said. I already said it today too. So the 74,000 number we showed for payrolls, 72,000 we showed for payrolls, or the 73,000 we showed for payrolls, I think that's going to get revised down too. All right, so the Swiss president says U.S. 39% tariff is much higher than what was negotiated. U.S. tariffs will have a very bad effect on the Swiss economy. Gold's running up, almost about to hit 3,400 ahead of the opening bell today. 3,400 almost. China's FX regulators say they will support the stable developing of foreign trade. Apple is actually popping up a little bit. It's at almost 212s today, 212. So it is moving up a little bit short term if you take a look at Apple. Apple up to 212s. Swiss president said, although pharma are not affected, U.S. tariffs are very bad for Swiss machinery and watch. U.S. tariffs will have a very bad effect on the economy. Government disappointed by U.S. tariffs imposed on country. All right, so again, President slammed Powell again. He said too little. Quote, I'm quoting the president here. He said, quote, too little, too late. Jerome, too late. Powell is a disaster. Drop the rate. The good news is that tariffs are bringing billions of dollars into the U.S. End quote. Apple's pushing up. Gold's pushing up. Nasdaq's kind of flat, but red from this report. Effective federal funds rate 4.33 for yesterday versus 4.33 on Thursday or on Wednesday. Yeah, so the big news today is the revisions. I would say it's the biggest news. You got AI scammers, and they are out of control. If you ever see anybody, listen to me. All right, if you don't want to get scammed in finance, listen to what I'm about to say. If you ever see anybody that's like, oh, this guy's a senior analyst, you know, and he's going to your comments and he's posting, hey, you know, Steve, the analyst, you know, he called this here. He can kindly make you, if they say kindly, it's a red flag. Okay. I'm just going to say that. He can kindly earn you 37% in 2 weeks or whatever it is. Do not listen to them. They just want to see if you're dumb enough to send them your crypto. And if you do, they'll pretend like you're making money. Anytime you ask them, you're like, hey, how's my crypto doing? They'll be like, oh, we're up 20%. They're going to tell you what you want to hear. You know, the issue is that when you go to withdraw that crypto, they're going to ghost you. They're going to disappear. You'll never see them again. You'll never hear from them again. They'll block you. You'll never see them again. They'll find some other sucker to do it to. So just be smart. No legitimate investment professional runs things through WhatsApp or any type of messaging service like that. None. Zero. They're just going to call you and they're going to try to sell you on it. You know why these guys don't call you? Because they probably don't speak English. You know, be smart. %70 already at rate cut odds, yeah. And it's getting higher and higher as time goes on, too. Yeah, I mean, I used to get them. I'm pretty sure the last update, like, I think a lot of channels are seeing a little bit smaller numbers. And I think the reason that's happening is because this last YouTube update got rid of a lot of the bots. Because we used to see them in the comments and they would be like, hey, you know, investment manager, you know, Steve, you know, helped me earn $7,687 yesterday, you know, and then they'll put a bunch of bots in one place and they'll be like, you know, Steve too? Yeah, Steve helped me earn $7,800 yesterday. Steve, gold just broke highs of the day. We're up to 3,400 and they're just trying to see if you're dumb enough to send them money, and you'll never see them again. They might tell you what you want to hear for months, trying to get you to send more money. Sometimes they even hit you with, oh, you're up 100K, but you got to send us 20K in taxes for us to send it to you. Nonsense, right? And people are so desperate, they're planning what they're going to buy with their 100K, that they're dumb enough to believe it. Yeah, so gold just broke up to 3401. Nasdaq's still around the lows. Apple's moving up. SPY's still flat. Again, y'all are hearing my Ninja Turtle ringtone. It's my Ninja Turtle ringtone, guys. Say Turtle Power at the end of it and you'll understand. Oh, people fall for it. I knew somebody that fell for it. You know? And the problem is that people that don't understand finance, they get involved with it and they want to show other people how smart they are. And so when they think they found an opportunity with good old Steve, you know, the confirmation bias is a powerful thing. I use confirmation bias to explain a lot of things, but I think it's justifiably explaining a lot of things. Confirmation bias means you're more likely to believe something that you want to be true. And so if I want to believe that I could go out and buy 5 lottery tickets and be a winner on every single one. You know, and because of that, I might be more likely to, if somebody came up to me and they were like, yo, you're going to win the next 5 lotteries in a row, I might believe them because I want that to be true, but it doesn't mean it's true just because I want it to happen. Oh, confirmation bias. And that's what gets people. They want to believe they're making money. They want to believe they just got to pay their taxes, $20,000 to the scammer so that they can get the money. And so they're more likely to ignore the red flags because of it. Same thing with trading, right? You learn a trading strategy that doesn't work. You spend all this time and effort into a trading strategy that doesn't work. You're more likely to ignore that sign, the signs of it not working. Why? Because you've spent so much time and effort. You want it to work. you know, and that's one of the hardest psychological aspects of trading, is that it's hard to be objective. It's hard to look at things objectively and look at things truthfully, because, you know, you spend so much time and energy and effort. And so, yeah. Gold's still running up, guys. Look at gold. NASDAQ still testing this low level here at 2361s. Not the low of the day. The low of the day is 2330. It's still testing it now. Are we up to 78% for rate odds already? Wow. Rate cut odds keep climbing, guys. Keep climbing. We are now at 66%. October cuts now at almost 90%, 88%. Wow. Yeah, yields, on the other hand, if we look at the 10-year treasury yields, now down to 4.2% right now, 4.2%. Declining heavy. And again, the interest rates and yields follow each other. So if yields go down, we have a lower interest rate sentiment. If yields go up, we have a higher interest rate sentiment. But 10-year yields now under 4.3% for yields. We're getting closer to the opening bell in 15 minutes. Scuba? Goat Steve? Everybody knows Scuba Steve, bro. The GOAT. Alright, guys, we got 15 minutes left. Yeah, bears are showing up. Low of the day on the NQ is right here. Nvidia is decreasing. Apple has been increasing some, but it's now going down. Microsoft just cracked lows of the day here. Microsoft now at 532s. Intel's breaking down. It's at 1940s. Meta is all the way down at lows of the day as well. New low of the day for Meta is 760. So big tech's breaking down. Mostly right now. With a couple exceptions. J-Pal obviously weighs inflation more. It's a stagflation scenario. Yeah. But if it is a stagflation scenario, wouldn't that give more credence to recession risks? Because stagflation is... what stagflation is an environment in which we have high inflation and weak economics and labor. It usually means we're trending more towards a recession, though. Fed's Hammock says the NFP report was disappointing. I don't know. Depends on if you want rate cuts. You think it can break under 23,000 today? I mean, people always ask me this, and maybe they're just wording it wrong. We could break below 15,000 today. It's a very, very low chance, but we could, you know. And so do you think it's likely that we break below 23,000 today? I think is what you want to ask me. And I think we're about 50-50. You know, we get a negative trend, it's certainly possible we break under 23,000 today, which is only right here. Right? We get a negative trend, it's certainly possible. I would say it's not low odds we break under 23,000. It depends on how the market reacts to the opening bell after this NFP report. Depends on what tech does, really. But it's certainly possible. Gold's ripping up. The VIX is higher. If we take a look at the VIX is currently sitting at 19. And we haven't even hit the opening bell yet, so I'm sure we're going to get some more influence there. Okay, so the US CEA Chair Moran says job revisions reflect May and June. Data from July is decent. But the July data showed 73,000 jobs. The July data showed 73K, way under the, like, 25% less than the 100,000, 105, 110,000 expected. Over 25%, really. So I don't know. That doesn't sound decent to me either. Just being honest. John, volume didn't change in it. What do you mean? Stream volume, or do you mean you mean stream volume, or do you mean liquidity? Alright guys, 12 minutes. A volume buying? Yeah, I mean, volume is going to be decreasing right now because non-farm payroll report is going to be the highest volume of the day. Like, if you look at where volume spiked on today, it's around 8:30 Eastern Standard Time when the NFP, when the labor report came out. So, yeah, I mean, volume is going to be decreasing relative to where it was at 8:30 Eastern Standard Time this morning, and we might see some spikes after the bell, but yeah, that's kind of what's going on. The president did tweet. He said a lot of stuff. But Ford vehicle sales for July came in at 189.3. Gold's still breaking highs. What have I done? NASDAQ around lows, but puts are gonna print, maybe. We're still kind of bouncing right around the 61 level. I still think there's a chance the market rebounds back up based off of I still think the market rips back up based off of the opening bell, potential rate cut odds, but you never know. We could certainly keep dropping. Yeah, so again, the unemployment rate is out. Nasdaq still bouncing at these lows. Gold is, of course, pumping up here. We got 9 minutes left. Yeah, we got ISM manufacturing PMI at 10 a.m. in about 40 minutes. That'll be interesting. And again, I think the market might want lower rates. And I think that's what we've seen. Hey, thank you, Rusty, for the donation, brother. I appreciate you. Thank you, sir. Tariff numbers stuff almost perfectly timed for bad payroll numbers. Yeah, we got ISM manufacturing PMI and Michigan consumer sentiment data going live at 10. So stick around. It'll be interesting for sure. All right, 7 minutes, chat. 7 minutes. All right, guys. Again, next week we got some stuff too, but I think next week we have services, right? So next week we've got ISM services Tuesday, factory orders Monday, jobless claims, Bostic speaking Thursday, Friday nothing scheduled. When is Jackson Hole? It's going to be August 21st to the 23rd. Yeah, I mean, again, look, market wants QE rate cuts and stimulus checks. I disagree. I mean, I think you're being sarcastic. We certainly do not need stimmy or QE in any way. I'd be okay with lower rates, especially after today's data. But we certainly don't need stimmy checks. We certainly don't need QE. Those are two things that would massively spike inflation if both of those things happen. I could look at, like, I like looking at Rolex graphs. Right, right, like here's the Rolex market index. Like if you want to just see, and watches might not be the best look at inflation, just as an example here. But Rolex prices have honestly doubled a lot since February. Or not doubled, but they've gone up. But like, to take a look at this. This is what happened to Rolex prices following the 2020. 2020 is here. Right? Look at the prices of everything. They doubled. And so, like, and again, I had a person that I knew that lives in Vegas. Everything was busier after everybody got those checks. The Rolex shops were busy. The luxury shops were busy. Prices in luxury goods. Bernard Arnault, LVMH guy, the richest dude in the world right now, isn't he? Is he still the richest guy? I know Bernard Arnault, which is the owner of LVMH, Louis Vuitton, Monet, and Hennessy. This is what LVMH stands for. Actually, Bernard Arnault has gone down about 5 billion. Oracle's Larry Ellison is now 2. It depends on when this was posted, though. But yeah. But the point is, prices went up from all that stuff. Do you think Jay Powell had access to May, June revisions and still didn't cut? If so, he thinks he's protecting us from if there's a worse outcome. I mean, I don't know if he's protecting us. You know, I think keeping this from us, you know, I don't know. I tend to think no. But to be completely honest, I'm not sure. Like, I think if Powell had access to this report in some way, he wouldn't have been as hawkish as he was on Wednesday. And so I tend to think no. If Powell did, I don't think he would have been nearly as hawkish as he was Wednesday. So I tend to think no. But you never freaking know. I don't know what they have access to over there. They might. They wouldn't tell us if they did. But yeah. Where do you see in that the 74% odds of a rate cut? For what month? What month are you seeing 74% odds? Oh, this month. or September. You're right. We are at 70. I'm showing 76%, 76 to 24% odds. So we are now 3/4. We're now 75% likely to cut in September. If, again, that's if everything stays the same, but that never happens. Yeah, that never happens. Let's see what we get. All right, guys, we are very close to the opening bell. We got 2 minutes left. Let's see what the market gives us. I'm not mad at Powell for the renovations. That doesn't have anything to do with Powell. Not really. You know, Powell's the FOMC chairman. He's not controlling the renovations to the Fed meeting. He might know stuff about them. But yeah. All right, guys, are you bullish or bearish for the opening bell? We got about a minute left. Are you bullish or bearish? All right, so we're starting to creep up. We're almost at 23,075, but we're still kind of bouncing a little bit into the opening bell today. We got 45 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream. We'll see what we get today. Bullish, maybe. Again, make sure you give your boy a follow on x.com/beginnertrades. We recently broke over 4,000 followers. We do have the White House official on tariffs said U.S. can't tolerate one-sided trade relationship. Fed's Hammock did say that data will drive any thinking about monetary policy votes. All right, there is the opening bell. Let's see what the market gives us. So far, a big red candle since the opening bell, but it's not the biggest, but it's big. Let's see if it holds. Buy. Again, I think there's a chance we could rebound at the opening bell based off of much more increased odds of rate cuts and economic rebounding. We'll see though. You never know. There's so much variance with this. Not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade smart, guys. I can't guarantee anything. Yeah, but unemployment did uptick from 4.1% last time. All right, so here's the lows of the day here. So maybe, again, do not copy me because I have no idea what I'm talking about. We might just dump. If we have a normal correlation between economics and markets, we might dump. If we have a backwards, good is bad, bad is good scenario like we did 2023, because the market wants rate cuts, we could go up. Actually, no, wait. Kind of, but for different reasons. Right, so there's a bounce. All right, we're rebounding back up a little bit here, chat. Gold over 3,400s right now. Buy is actually down significantly here. Let's take a look at Nvidia. Nvidia bouncing back. All right, so we're now green since the opening bell. And a big red candle. Very flat since the opening bell. Kind of indecisive here. All right, guys. So remember, at 10 o'clock, we have regular manufacturing PMI at 9:45, and then we have construction spending and ISM data and Michigan data at 10. right, so now we just broke lows of the day here. Crack lows, and we're now down to 20. Let's watch 23,000 right here. 23K, psychological level. 23,000. Right, so we went down to 2310. I remember we got ISM manufacturing and consumer sentiment. Not nothing. I'm gonna try to buy maybe 23,000. Alright, so we tapped 23,000 exactly. Magic levels. Pretty easy to predict that one, though. Alright, guys, so, we bounced exactly at 23. I was thinking about buying it, but I gotta let my rules play out and let 5 minutes pass since the opening bell. So we did bounce right at 23,000. Big psychological level. The SPY is dipping down here. Gold dipped under 3,400 for a split second, but we still got time. All right, here we go. Broke under 23,000. Remember, we got regular manufacturing PMI at 945 too. All right, so we got White House official says Switzerland refused to make any meaningful concessions by dropping trade barriers with the U.S. U.S. cannot tolerate a one-sided trade relationship. I think we covered a little bit of that earlier. I might buy this again here. Let's see if we can. Hold on. So we bought the dip. Took half off there just because we could. We'll hold the rest. Add a little bit to the race back up. I'm gonna add one more piece to this if I need to. But it's a risky buy, especially at the opening bell. There we go. Yes, sir. Alright, so we're out. Kind of scalping moves. We're 7 minutes into the open. Short. Go the other way now. The big rip back up. I want to see a retracement back down. Add one more piece of this here. Bouncing back a little bit too quickly. I'll add here. Yeesh. Alright, so we rejected 31, but I'm gonna cut half of that there and let the rest ride, be a little bit more loose with it just because we can. There we go. There. But y'all can't see this, my bad. I'm on a different account. But there you. Might add up to that 2330 level here, which we have on our charts. This one bump down some after this. Take a little bit more risk, but that's okay. There we go. Green on the last two. We'll cut another piece of that there. Let it break down some more. All right, we're out. Again, Nvidia started to move up, but we are at a flat day. And again, we do have some data releasing later too, so just be ready for that. Well, you're looking at Forex, I'm looking at futures, D. Well, here's 23,000 test again. I'm gonna buy this. Small though, we're gonna keep it small, see if we get a big retracement. Maybe we'll add to it if we get really green. Yeah, I'm gonna cut that. I got out basically flat because we're hitting 23,000 again, but we can pop back up. Definitely a risky trend to attack here, but that's okay. I'm back and forth. I'm gonna cut this. There we go. We're looking really close to lows of the day, and it looks like we're gonna break them. There we go. Liquidity grab potential here, though. Kind of a risky short. But I want to see if we flush down. Go. Better. I'm going back and forth, but we've basically got out green here. Here we go. We're out. Once we broke under 23,000 again, that's kind of my opportunity to short. That's why I jumped in there. Nvidia turned the other way. SPY is still flushing down here, so a very weak Friday on this labor report. Again, in 5 minutes or less, we get the, or in 4 minutes or so, we get the regular manufacturing PMI. The big one is the Institute of Supply Management, or ISM data, at 10 with Michigan sentiment, but still relevant. Are you buying these dips here, chat? We did a poll. Should we cut rates in September? Almost 900 votes. 73% say yes. 27% say no. We start buying a little bit here, small trades, but it's a risky thing to do. But there we go. We're out. Deep red showing up in markets at the opening bell here. Look at this drop. Somehow we made money on the long side. We're net green, but Apple at 208. A lot of stuff. Everything's breaking down here, essentially. All right, guys. About 2 minutes until we got regular manufacturing PMI data. Yeah, I'm just trying to be calculated with my trading, very small short-term trades. We're gonna bottom feed this level. We're down a lot, so we can bottom feed it. There. All right, we're out. Again, Nvidia broke down to this mysterious level on my chart. I don't know what it was. 171.83. New lows of the day. I don't know when I drew that chart on that level on Nvidia, but it worked. Kind of. This one. Still showing weakness here. All right, guys, less than a minute before regular manufacturing PMI data is expected today at 49.5 for July, 49.5 for manufacturing PMI by Market Economics. We'll see what happens. It's about to release in about 30 seconds. Hit the live button next to the play button. Yeah, I mean, the volatility is so high today. Gold's pushing up back over 3,400s. Still breaking down. All right, so there's the data release here. Data came out at 49.8, slightly stronger than expected. I don't think this is going to move markets, but 49.8, slightly stronger than the 49.5 expected, but essentially flat, 0.3% better than expected. A little bit better, but the big one drops at 10 a.m. Why is market dropping if odds of rate cut are going up? Well, because we had a 258,000 job revision data for the last 3 months, which shows a much bleaker landscape of jobs and labor market than expected. Now, it doesn't mean we might have earlier rate cuts, but I think that, again, I thought we might get a positive reaction from it, just to clarify. But, you know, the argument against that would be bullish or hawkish Powell mixed with weak labor market is not a good recipe. Not a good recipe. Still breaking down here. Still flushing down pretty major. I'm gonna start buying this up now. We got some minutes until the ISM data comes out. We're out. We've had honestly pretty good success scalping these rebounds that we get after like extended drops. I mean, we could always keep going down, but again, the big data shows up at about 13 minutes. So you'll see. Sure, but the market is always short-term in its reaction to things. You and I know that. Yeah, I mean, we might have positive reactions. Next week, we have almost no economic reports. So we do have, like, Palantir earnings on Monday. And other stuff, too. So yeah, so we are seeing somewhat of a slight bounce back. All right, we got Exxon, Chevron earnings. mRNA earnings, REGN earnings. today. Most of these came in mixed. Oil came in flat. Good EPS, but bad margins. Bring that OCG in. Nasdaq just cracked lows again, though. We keep breaking down here. All right, guys, we're still cracking down here, man. Very weak. Look at this weakness showing up. SPY, break it down. Giving back a lot of the gains we put in from tech earnings. NVIDIA all the way down at 170 here. Are you buying this dip? Let me know in chat right now. Are you buying this dip? Yeah, the VIX is probably flying. I mean, we're super weak, so VIX is going up to over 20 right now. Nasdaq looking weak. Again, guys, we got... all right, I'm going to buy this again. We broke it down enough to where I can probably add a couple and have a pretty easy green trade. Yep. All right, we're green. We're green at both funded accounts that we have today. Been a pretty easy day to make money, I would say. Pretty easy trends, but we're actually been scalping bounces. All right. So we have USCEA Moran says... and barring if the Fed catches up to the U.S. president's view with a big lag. See. Oh, embarrassing if the Fed catches up to the president's view with a big lag. Right? So this is actually what they said. Sorry, not embarrassing. Embarrassing if the Fed catches up to the president's view. Another interesting report at labor and manufacturing in the United States coming out in 9 minutes, chat. 9 minutes. We have ISM manufacturing PMI, which is the Purchasing Managers Index. This shows strength or weakness in manufacturing. A level above 50 indicates an expanding manufacturing sector. Below 50 indicates a lagging or contracting manufacturing sector. Today, it's expected mostly break even at 49.5, so mostly break even, but a slight contraction in the manufacturing sector is expected versus 49 last time. So a little bit stronger than last time, but a slight manufacturing correction. The really interesting numbers that we're going to look at today is Michigan consumer sentiment as well. Michigan consumer sentiment drops at 10. So again, Michigan consumer sentiment drops at 10. This is the finalized number. Last time was 61.8. The prelim numbers were 61.8, so this is the finalized number for Michigan consumer sentiment. But remember, last time was 61.8 consumer sentiment. But we also have inflation expectations releasing at the same time by the same source. So 5-year inflation expectations showed up at 3.6% for the prelim numbers for July and 4.4% for 1-year inflation expectations for July. And so we'll see if we have updated inflation numbers. And yeah, we got 8 minutes left. Cut rates now. I don't think we're going to do an emergency cut. I said this before already. I'll say it again. I don't think we're doing an emergency cut. Ugh. I don't think that's what we're going to get. I don't think we do an emergency cut. I think if we cut, we're going to cut in September. I think the optics are too bad for an emergency cut for the Federal Reserve. You know, I think it's easier for the Fed to say, hey, data's changed, we're going to now cut in September, versus, hey, you know, the press was right, we got to cut now. You know, because I just don't think that's going to happen. Again, I'm not agreeing or disagreeing with anything. I'm just saying I just don't think that's going to happen. And I think it's easier to say, hey, we're data dependent. The data's changed. We're going to cut September is what I think they're going to do, most likely. And so I don't know. I think the revisions were bad. R says there's no need for a cut. I think the revisions paint a much bleaker picture for the labor market. You know, the 74K, I'm not really worried about that. I mean, the previous one prior, you know, we've had some bad payroll numbers off and on. But I think the continued revisions to the previous numbers showing weaker than expected labor market is the big red flag here for the labor market. You know, I think the revisions are bad. 200, almost 60,000 downward revision to May and June. That's not good. And again, I think it also could paint a sign in terms of like whether this 74,000 number we got this morning, or 73,000 number we got this morning, whether that's going to get revised next month, you know. And I think you have to look at that objectively and put that as a genuine possibility as well. And if that happens, then we're really in a weak labor market situation that's going to start impacting GDP and everything else. So all right, guys, we got about 5 minutes before this data comes out. Again, ISM manufacturing data. We got about 5 minutes. So. All right, guys. Less than 5 minutes. All right, we hit 22.9s here. Here's 22.9s right here. Let's watch this level specifically. We got 4.5 minutes left. 49.5 is what's expected. Yeah, he's not doing an emergency cut. All right. Look at that. See if we get back over this level. Again, USCEH here says embarrassing if the Fed catches up to the president's view with a big lag. Essentially what he's saying, it'll be embarrassing if Powell is actually too late, is what he's saying. And again, like, look, man, I've had a lot of people say I'm on the left. A lot of people say I'm on the right. I'm neutral here. I'm not against you. I'm not for you. I'm just covering what I see. Hope you guys understand. I think too many people just kind of parrot what they hear one side say, and they don't really look at the other side. And I think you got to look at both sides. Truth is somewhere in the middle anyway. So, I mean, the truth is somewhere in the middle. All right, guys. Here we go. All right, guys. We got 3 minutes left until the report drops. 3 minutes. This is like the wave Bodie wrote at the end of Point Break, the movie. I like Point Break, the movie. The Fast and Furious is the same exact plot as Point Break, but I like both the movies. I'm not against either one of them. Hey, we got 2.5 minutes. Will it move markets? It might. We got a lot of stuff dropping. So like normal Michigan sentiment, maybe. Normal ISM manufacturing PMI, maybe. We got both of them dropping at the same time. Construction spending as well. So normally it's neutral on whether it moves markets. This is a situation in which it might have more of an influence over markets, just specifically because we got a couple different releases going live. right, 2 minutes, chat. 2 minutes. Hit the like button, hit the subscribe button. I appreciate the love. Thanks so much. All right, here's the data. All right, you got about a minute and a half left. A minute and a half left. Make sure you hit the live button. You put it in 2x speed. You're always caught up on the stream. And if you put it in 2x speed, I'm not going to talk like a chipmunk unless you're lagging behind. So if you hit the live button and put it in 2x speed, you almost never lag behind the stream. You'll always be up to date for the recent economic reports that we cover here every day. So this level's a little off. It's 22.9, the level, which respect. All right, guys, about a minute left. 1 minute. Over 80% chance of a rate cut. Again, less than a minute here. Yeah, 82% chance of a September cut now. 82% chance. And again, I agree with this September data. I thought we could justify a rate cut on Wednesday. People would get a little upset about me saying that. But again, I thought we could justify it. I certainly think we can justify a September cut now. All right, guys, 30 seconds. Hit the live button next to the play button. Put it in 2x speed. We'll see what we can get here. Day's about to drop right now. 49.5 manufacturing PMI is what's expected here. 20 seconds. Yeah, give me a follow on X at Beginner Trades. I appreciate it. We got 15 seconds. 15 seconds. All right, 5 seconds. All right, here we go. And here's the report. Okay, so we showed up at 48 even. 48. Weaker manufacturing than expected. 48. Michigan consumer sentiment showed higher one-year inflation expectations at 4.5%, but lower 5-year inflation expectations. Again, Michigan consumer sentiment showed mixed results. Higher one-year inflation expectations, lower 5-year inflation expectations for the University of Michigan. ISM manufacturing PMI. 48 versus 48.5. Again, Michigan consumer sentiment data actually showed, I'm sorry, 61.7. 61.7 versus 61.8. So basically flat. Again, 61.7 versus 61.8. So again, mixed results for inflation expectations. Higher 1 year, but lower 5 year. NASDAQ did not like this at all, though. Look at this. Again, a little bit weaker consumer sentiment is probably not what triggered this. Current conditions at 68. Again, ISM manufacturing was 48 versus 49.5 expected. So a little bit weaker than expected, but not enough to really like justify this big reaction negatively. It could be construction spending decreased 0.4%. ISM manufacturing employment showed 43.4 versus 46.8 expected. Higher 1 year inflation expectations, lower. U.S. construction spending, again, negative 0.4% versus 0%, previous negative 0.3. University of Michigan conditions were 68 versus forecast 67.1 as well. So NASDAQ did not like this at all, still dropping down here. I might start buying this dip. We're kind of flat on this account. I'll risk it for the biscuit for you guys here. There. All right, we're day trading on Top Step, so you can see how similar this is to day trading stocks. No PDT and futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, some currencies. Again, incredibly similar to day trading stocks. I'm day trading the NASDAQ, which is the NQ100. It's 100 of the largest companies in the world in an index. You can day trade the S&P. Top Step's the most legit way. It's $50 a month for the base one. If you pass the test, you get a 50K funded account, 90% split. If you fail, give me out the last one. Come on, give it to me. I will have to cut the last one randomly. Yeah, if you fail, you're out $50. So it's limited risk. You can get started for $50. Good enough to pass it. 50K funded account, 90% split. If you fail, you lose $50. It's the best of both worlds. I'm sponsored by them, so I get paid by them, so I'm biased for sure. You want to confirm it all with them. I can't guarantee anything. I'm not an investment professional, but I genuinely think it's a much better way, considering most day traders lose money. It's a lot cheaper way to learn because you're risking $50 for the base one versus thousands trying to fund your own account, which makes absolutely no sense. My dip buy worked here too, but if you want to check it out, there's the link in chat. We'll see if we get a resurgence here. I don't really understand the too late thing, as the Fed can amend rates at any volume or pace. Well, the whole point of amending rates or changing rates is to be proactive to avoid a recession. So too late is referring to, hey, do not let the United States get close to entering a recession by keeping too much of a restrictive or hawkish stance in interest rates. There's a lag between cutting interest rates and the overall positive impacts to the economy in a lot of ways. And so even if the Fed can amend rates at any time, there's going to be a lag to when the federal funds rate, which is the rate that the Federal Reserve can influences everything else. Not everything, but influences many other things that are vital for the economy. And so the too late thing has to do with, hey, don't let us enter a recession by keeping rates too restrictive for too long. I'm not saying I agree or disagree, but that's the argument against the restrictive stance right now. All right, guys. So again, manufacturing PMI weaker than expected. 48 versus 49.5, weaker than expected. Michigan consumer sentiment, 61.7 versus 61.8. University of Michigan final survey, if we take a look at it, looks like this. Consumer sentiment improved for the second straight month, inching up a scant single index point from June. Current conditions rose about 5%, with highest reading since February, while the expectations index fell slightly. A rise in sentiment among stockholders was offset by a decline among consumers who do not own stocks. Perception of this month's economic developments were similar across the political spectrum. Also, some minor increases in sentiment this month, although recent trends show sentiment moving in favorable direction. Sentiment remains broadly negative. Consumers are hardly optimistic about the trajectory of the economy, even as the worries have softened since April of 2025. Year ahead inflation expectations fell for the second straight month, plunging from 5% last month to 4.5% this month. This is the lowest reading since February 25, but above December 24, just after the election. Long-run inflation expectations receded for the third consecutive month, falling from about 4% in June to 3.4% in July. This is the lowest reading since January of 25, but again, still considerably higher than the December 24 reading. That's the University of Michigan sentiment data. So a little bit hawkish, a little bit bearish outlook. I'm looking at this 22.9 level here, chat, to see what we do. We got close to that level, but we're not quite over it. All right, we got a good enough cushion to where I might try buying this. Look for chop over the last few minutes, see if we get some stabilization. There we go. Tried to sell at the top, but didn't quite hit it. Go. Very nice green day on all my funded accounts. At the very least, guys, what today can show you is that if you wait for volatility, it's easier to make money in markets. If you wait for volatility, it's easy to make money. Now, you got to scale down your risk. But if you wait for volatility, you can make money in some markets here. So, yeah, we got a free Discord as well. You can see the link right there. You can make sure to give me a follow at Beginner Trades. Code X. Great way to help support the channel. We recently broke 4,000 followers. We post all the big data releases and expectations and all that stuff live. So. Look at the VIX. Look at NVIDIA. All right, look at this rebound. Let's watch this 23,009 level here, 23.9. Gonna short it. All right, we're out. Kind of shows wait for volatility. NVIDIA just ripped up too, so look at NVIDIA. NVIDIA's over this big milestone level that we have at like 173s. Over that 23.9 level, so our short-term short was the smart move. NVIDIA's starting to rebound back up some too here, so NVIDIA is climbing higher. Hey, thanks, Zachary. How you guys do today? You guys red or green right now? Oh, we're now over this 23.9. All right, looking at the red. Deep red, both. Green, deep red, no. Best day of the week, green, red, green, red, red, green. Kind of mixed results today. Bitcoin bouncing back up, but hit some 114 lows. NVIDIA's climbing back higher, though. Apple's climbing back higher. Microsoft testing lows of the day right now, so Microsoft's still kind of weak. Again, here's gold. 3,400 still, so gold's doing pretty solid. I'm down almost 5K. Man, Fernando. Still down 200 on the week. Nick, sorry to hear, bro. 6K on the week. Lost my account. Yep. Hopefully it was a funded account, not an actual account. Oh, that dip. We're going back up. Yeah, I think the dip was easy to buy. We did hell at 23.9. Look. And that's why, like, even if the level doesn't work on like a test of it, a lot of the time when you pull back, you get that kind of sentiment. Again, rate cut odds were over 80% the last time I looked at them. Let's take a look at them now. All right, so they've decreased a little bit. We're currently at 76.9% odds of a rate cut in September, 23% chance of a pause. Nvidia's climbing higher too. Yeah, I think we'll probably see the rate odds decrease, especially as we get some Fed comments. So again, we're currently at 77 versus 23 odds. I think we'll continue to see that decrease, that dynamic decrease. So at 23.9, so let's see if that level holds support. I'm sticking around a little longer because I think the volatility justifies it today. Yeah, Microsoft down. Apple and Nvidia are kind of rebounding here. Nvidia more than anything, though. Nvidia almost green since the opening bell, which is certainly not the majority of tech stocks today. Palantir's bouncing back too. Yeah, my markets have been tumbling here for sure. Next week will be really interesting heading into the new deadline, which is August 7th for a lot of companies, which is going to be next Thursday. Yeah, so we'll see. Yeah, Palantir reports on Monday. Yep. All right, we did bounce at that 22.9 level we talked about. Yeah. What do you guys think we get next week? Do you guys think we get bullish or bearish action next week? Earnings next week, just to put this into perspective. Monday, we got Berkshire Hathaway, Wayfair in the morning, BioNTech, On Semi, Tyson Foods, and more in the morning. In the evening, we got Palantir, Hims, Axon, Vertex, and more. Tuesday, we have some other earnings in the morning. We got like Pfizer, Caterpillar, BP, DuPont. Tuesday evening, we got AMD and Supermicro Semiconductors, which is kind of big. We got Opendoor, Snapchat as well, Lucid, Upstart. Wednesday, we got Uber, Shopify, Novo, Disney, and more. Wednesday, after the bell, we got AppLovin, IONQ, Duolingo, and Fortinet. Thursday, we got Celsius, Eli Lilly in the morning, QBTS, Quantum Stock in the morning too, Sony. Thursday evening, we got Trade Desk, Rocket Lab, SoundHound, Block, Pinterest, CleanSpark, Twilio, and more. And then Friday, we got Fubo and a couple other ones in the morning. So we got a big earnings season next week too. NASDAQ is starting to bounce back. Watch this 23,000 level. I think this 23K level is a big level. I'll do one more poll and then I want to see what people have to say about it. But do you think, are you bullish or bearish on the market? For next week. Are you bullish or bearish for next week? Are you bullish or bearish for next week? Vote on the poll. The poll is now live. NASDAQ starting to rebound back up here too. I vote bearish, not calling a major correction, but could be painful. I just bought some Hims. Ahead of earnings, just be careful, brother. Can trade the bounce, but moving forward, market correction mode. Yeah, so looking at our votes, we got about 50 votes in a couple seconds. 40% are bullish, 29% are bearish, 30% are undecided, but it's changing. Yeah, I tend to like Hims as a company, but I'm also a little nervous about earnings impacting it a little bit too much. Market has been in a topping pattern, so expect weak. Valuation is too high, even good earnings can't save it. Maybe. We're up to 960s here. Again, watch 23,000 here, 23,000. I think 23,000 is what you want to watch. I'm always a bear. Going on went crazy buying that I'm nervous about is SYM. Yeah, I mean, so far, 45% are bullish, 31% are bearish, 24% are undecided. Interesting day for sure. Oh man, all right. Again, man, non-farm payroll showed 73,000 versus 105 to 110 expected. Just to kind of recap the day, previous of 147, unemployment showed 4.2%, uptick from 4.1% last time. The scariest thing is the revision in jobs. We had 260,000, roughly 258,000 revisions downward for May and June. Showed 260,000 less jobs for May and June than expected. Paints a much bleaker picture of the economy. With this picture, the odds of rate cuts have increased substantially from what was 40% odds of a September cut to now about 80-20 versus cut to a pause here. So again, very much more bleak picture of the economy and labor market than expected. Very much weaker picture of the labor market and the economy than expected. Let me know what you guys think. Again, if you want to help support the channel, hit the subscribe button, hit the notification bell. Yeah. We just broke 2 weeks low. Dow hits month-long low. And yeah, if you want to help support the channel, hit the subscribe button. Check out Top Step. Beautiful way to learn. Do not fund your own account thousands of dollars as a beginner trader. You're probably going to lose. Instead, try Top Step. They give you a 50K demo. If you fail, you lose 50 bucks. If you pass it, you get a 50K funded account, 90% split. If you're good enough, you can start taking withdrawals. If you fail, you're out 50 bucks. It's the best of both worlds. Zero commission. Day trading futures, very similar to day trading stocks. No PDT rule. Great way to learn. Again, I don't know what I'm talking about. You got to confirm it all with them. I might be wrong about anything and everything I say. Sometimes I trade lose off stream too. You might not see it. Don't copy me. Not an investment professional. It's all love here, guys. I appreciate the support. Have a great day. Y'all be careful. We'll see if inflation looks anything different on CPI data. But again, a big, busy week. Y'all be safe. Have a great day. Y'all be careful. And yeah, have a great day, chat.